Okay, this is the 2015 Examcraft Incomplete B. So it doesn't seem to be too much exciting stuff in it. Just the thing to note is this here, the creation of bad debt provision, and there is depreciation on equipment. There's nothing else too exciting in it. The other thing I'm going to look for from now on is there a bank? So the bank is given, so we don't have to do a bank account. Okay, so just be aware of that. So a couple of things. We'll get in our capital on the first, which is 120,000. So capital and reserves. Yeah, let me change that. Right. So capital and reserves. We've got our capital on the first, and that's the amount we pay. We lodged in the business bank account, the 120,000. Okay. So I'm going to put in my information from the bottom of the question now. So I've got my stock, current assets of 47. I've got my debtors, and straight away I'm going to put in my less bad debt provision because I've checked to see and there was a bad debt provision in it. So I might as well get that in now. Okay, so the debtors is 3750, and the bad debt provision is 4% of debtors. So I'll just get that in, and that's 150, and then that'll become an increase in bad debt provision, or the creation of a bad debt provision is going to be 150. So that's that done now, and we don't have to worry about that anymore. Electricity bill due, that's a liability. That's 166. Creditors is a liability. 3950, 3590. And now he's saying the value of premises is 170. So we have to have premises, and it's going to be cost, depreciation, and value. And the value is 170. Now that's sort of suggesting to us, and we'll see it soon enough, that there's depreciation on premises. Okay, so that's that one in. Excuse me. Our next job. Sorry, I got a bit of ice caught me there. Our next job is to work out go back up to the top and work out the goodwill of the business. Okay, so goodwill is what we paid for the business minus what it's worth. So we paid 100,000 for the business. We purchased the business for 100,000. And what's it worth? Its value is the assets minus the liabilities. So the value is it's premises of 80,000. I'm not going to write out all the words in these. I'm just going to put them in. Premises of 80,000. Equipment of 10,000. They're all both assets. Stock is an asset for 3,000. Debtors is an asset. Now, Lightning Chew is a liability, so minus 580. Trade creditors is a liability, minus 3250. Rates prepaid is an asset, so that's plus of 500. Stock of oil is an asset, plus 570, and stock of stationery is an asset, plus 150. So the value of the business is all of those added together, which is 93090. So we just take that away from the 100,000. That'll give you a goodwill of 6910. And we're going to put that in there. So we've all our preliminary stuff done. I'm going to open up my drawings working straight away and have that ready to go. And then I'm going to start back up at the top. So premises is 80,000. So we know premises is a fixed asset. We go down and see what he's done with what's what's happened with premises. So it started at 80 and then he got a loan for 100,000 and there's another premises of 95 there. So 80,000 plus 95,000 is 175. So the cost of the premises is 175. If its value is 170, that means there must have been depreciation for the year of 5,000. So that needs to go into your expenses. So that's depreciation of premises. And that's that looked after now. Okay, so that's our premises done. Equipment is next. So equipment is 10,000. Now normally he buys equipment, so we go down and see in the equipment here, and he purchased equipment for 14,000 on the 1st to the 10th. So he's got 24,000 there. Right. Well, that would mean he's got depreciation of equipment. Now we took a note of that when we were reading through the question, that there was depreciation on equipment and it's 15%. So this is like your question 1. So it's 15% of what? So for the first 9 months of the year, he only had 10,000. So it's 15% of 10,000 by 9/12. And then for the remaining 3 months of the year, he had a further, he had equipment worth 24,000. So 24,000 by 3/12. So we'll just do out those sums. 15% of 10,000 by 9/12 and 15% of 24,000 by 3/12. And that'll give you your depreciation on equipment for the year. Okay, so that is 2025. Same process, depreciation of equipment here. There was no depreciation to start off with, so your accumulated depreciation is the same. So 2025 as your expense and 2025 as your accumulated depreciation. Okay, and that's, sorry. So 24,000 minus 2025 is 21,975. So that's that one finished with now. You can ignore that depreciation. That's all done. The bad debt provision is now done. So we're back to just being a fairly straightforward incomplete B, I hope. Stock is 3,000. That's your opening stock. And I think while we're there, we'll put in our closing stock of 47. Okay. So that's opening stock in. Debtors now. Debtors is used to work out sales. So we know sales is going to be our final answer. So we'll ignore that and we move to our light and heat. And that will have our working. So we've got light and heat due at the start of the year. So we always go down and we'll find our light and heat, which is 1640. If we've a due at the start of the year, it means it's due at last year. So due on the 1st of the 1st is 580. So we'll take that away and we'll add on the due at the end of the year if there is one. So there's a light and heat due of 166 at the end of the year. And we'll do the same with oil. There's a stock of oil at the start of the year, so we're going to add that on. So remember, you add opening stocks. Stock of oil, 1st to the 1st we'll add on, which is 570. And if there's a stock of oil at the end of the year, which there isn't, we would take it away. So that'll give us a light and heat used of of 1796. Okay, so let's have a look at it and then see, was there drawings? Because there's pretty much always drawings in light and heat. So power estimates that 1/4 of the light and heat. So 1/4 of that is for the private section of the business. So we'll take that, we'll find 1/4 of it. That's 449. and we're going to take that away to get our expense. And that's 1347. And at that point, I'm going to start my drawings working. We've got 449 that needs to go in immediately. Okay, so that's our light and heat. Next one is stock of stationery. So we have to see which one stock of stationery best ties in with. No, it's not, sorry. The next one is trade creditors, which ties in with purchases. Purchases is our final answer, so we don't do anything to that. So we 4 months rates prepaid is our next one. So we've got our rates working. So the figure from rates from the bank, our starting figure is for 12 months is 1,800 euros. Okay, we've got a rates prepaid at the start of the year. And the rates prepaid for the first 4 months is 500. Okay, so that's 12 months. And then this is 4 months. So if you have a 4 months prepaid at the start of the year, you'll also have a prepaid of 4 months at the end of the year. It just means that you're running your rates from the 1st of May to the 31st of April each year. So we take that 1,800 divided by 12, multiply by 4, and your rates prepaid for the end of the year is 600. And that gets taken away. So your rates go down to 1,700 as an expense. So the rates is 1,700. Check for drawings. Now, there shouldn't be drawings. You can't really have drawings on rates, but some of these questions do have them. So 1/4 of the rate, so they do. So less drawings, and it's 1/4 of that, which is 425. So your expense then is 1275. So a couple of things we're going to do. We're going to put in that rates 425 immediately into our drawings. We're going to do this prepaid 600 into our assets because that is the one you'll forget. Easy enough to forget. So that 600 goes in there. And then finally our 1275 is our expense. Okay, so 1275 is your expense. Is that fair enough? That should be all right. We can move on then. So that's your rates done. Your stock of heating oil we've done. So stock of stationery is next. So that was the one I was saying we did find what stationery will tie in within our expenses here. So you're looking along, it's not light and heat interest. It could be wages and general expenses. There's nothing else it could be. So we'll go wages and general expenses. And wages and general expenses starts off at 25.6. There's an opening stock of stationery at the start of the year of 150. So we're going to add that stationery on. That's 25,750. Now, don't think there's any drawings on it. No. Now you could include the college fees if you wanted, but we're not going to. So we're just going to put in that wages and general expenses 25,750 in our expenses. So we've all our stuff from the top done. Make a note of this 25% margin, and then we'll move on. So each month, Power took stock goods to value of 360. So we'll just put that in our purchases, working, purchases drawings. Each month he's taking 360, so it's 360 by 12. Just be careful of the language, it's not each week. And he takes cash of 420, so 420 by 12. Give you 5040 there for that drawings. Okay, so That's that one done. Next one is the loan. So he borrows 100,000, part of which is used to pay for the building. So we know that. So the loan is 100,000. And I'm just going to make a note of that there till we see how we're repaying it. It's agreed that he will repay it in annual installments of 10,000 each. So every year he's going to pay 10,000, and the first one is payable in June. So within 1 year, he's paying 10,000. He hasn't paid it yet, so he's paying 10,000. After 1 year, he will have 90,000 left to pay. So in total, it's still 100,000. 10,000 and 90 is the 100. Okay, so that's that. We'll do the loan interest. Interest is 9% per annum. So it's going to be 9% of the 100,000. And he got the loan on the 1st of the 8th. So 8, 9, 10, 11, 12. So 5 months. Is 3750. Okay, so that's his loan interest. What's he got on that? Well, he's going to have paid some of that. So we go down and check and see what interest has he paid. He's paid 3,400. That means he still has 375 left to pay. So that's his loan interest due. So again, I'm going to put in that loan interest due up here. 375. Then we're going to see if there's any drawings on the expense. Most of the time there's drawings on loan interest. So 1/5 of the interest payable is drawings. So we're going to take the 3,750 as the amount payable, and the drawings of that is 750. So he's left with 3,000 left to pay in the profit and loss account, and the 750 into our drawings working. So 3,000 into your profit and loss as your loan interest. So that's all that done now. That's the loan interest finished. We can move on. We're nearly there. During the year, he received an inheritance of 7,000, and this was lodged. So that's capital introduced. He's putting that money into his own money into his own personal money into the bank, into the business bank. So he's investing capital in the business. He also made the following payments: light and heat. So we've done that. Interest we've done. Wages we've done. Equipment we've done. Rates we've done. And college fees. So college fees is an expense, and it tells us half of the college fees is an expense, so 3,000, and the other half of it is drawings. It's for the private section of the business, so or for his 2 kids, so that's drawings. I think we're pretty much done now. So he estimates the 1/4 of the light and heat, rates, interest payable. That's all done. The provision for bad debts and depreciations are done. So we've everything in. We're at a point now where we can finish the question. So we'll add up our fixed assets, and then we'll add on our goodwill onto it. Now I'm going to start getting into the good habit, as I keep saying, of totaling my costs as well. My costs and my depreciations. Otherwise I'll start losing marks. So that's 191,750. Add on the 6,910 is 198,885. So I've got my rates, my debtors, my closing stock, and I've managed somehow to leave out the bank, despite having brought attention to the bank. That was 15,300. You will always have a bank. If you don't have a bank in your current assets, you're gone wrong. Your business has to have a bank account. So just make sure you've got the bank. If it's not down here, you have to work out what the bank is, and you can do that. They give you enough information to actually do that. So your bank adds up to 24,200. So your current liabilities for them add up to 14,131. So it's given me a different loan interest due figure. I just want to check that. So that should be 350, shouldn't it? Oh God, sorry. So we'll just change that to 350. So that's 14,106. So I knew that number was, anyway. We'll just take them away from each other. And you get 10,094 as your working capital. And then we'll add that answer on. And that gives you finance by 208,979. So two things to do. Write in our net profit and we put in our less drawings. So we'll just take our drawings figure, we'll add them all together. And that is 13,984. So we put that in as a minus. Okay, so then we go down and we write in that we've got 208,979 as our capital employed. So we're forcing the thing to balance. So 208,979 is the figure. We're going to find our balancing figure or our net profit by saying, well, what is the number that 90,000 plus 120 plus 7 minus our drawings? What number do we add to all that to find 208,979? So work backwards. So we'll take the 208,979 to add on the drawings, add on the capital introduced, add on the capital on the first of the first. Or sorry, take away the capital on the first of the first and the capital introduced. Take away the loan, and you get a net profit of 5,963. And you can check that now. So 90 plus 120 plus 7 plus 5,963 minus 13,984 should give you 208,979. So we take that 5,963 and that becomes our net profit over here. Okay, so we take our expenses. We're going to add up our expenses because we're working backwards in this. That's 41,547. Then we're trying to find, there's no investment income, there's nothing to add on here. We'll just take these out of it. I'm just going to delete them just to make it neater. So how do we find our gross profit? Well, gross profit is the number that you take 41,547 away from to get 5,963. So basically, we're going to add the two of those together. And that's 47,510. It told us then that gross margin is 25%, so profit is 25% of sales. So if we divide that by 25, multiply it by 100, you get 199,040. And then to find your cost of sales, that's the difference between those two numbers. So now it's nearly like our capital employed. To find our purchases, it's opening stock plus purchases minus closing stock is gross profit. So then to find your purchases, work backwards. Take your 142,530, add on the 47, and take away the 3,000. That'll give you your answer of 144,230. If you want to check that that's correct, 3 plus 144,230 is 147,230 minus 47 is 142,530. So then you just have to find what your purchases is without your drawings. So add back on the 4320 drawings, your stock drawings from earlier on. Add that on and you get, well, that'd be 148,550. Take away the 4320 and you're just showing that as a separate working. So that one wasn't too difficult. It's very, very similar to the last, whatever it was, 2013, I think, leaving cert one. Okay, so we'll leave it at that. Oh, sorry, which might as well do the part C's while we're here, the theory. It's all sort of the same. Why would you not be satisfied with Power's record keeping? Well, he doesn't keep books of first entry, so he doesn't have cash books. He's relying on an estimate to calculate his profit. So this here, so and these incomplete Bs, you can always use that as a problem. He hasn't kept, or we've no evidence that he's kept proper bank or cash book, bank accounts, and he hasn't used the double entry bookkeeping system. So what recommendations would we make? Well, the recommendations are that he does all of those things. So he keeps an analyzed cash book, keeps proper bank records, doesn't estimate, and uses the double entry bookkeeping system to keep a proper set of accounts. Okay, hopefully that works for you.